Hello and welcome back to my channel. Today's video is all about my student loan repayment strategy. So I'm going to be talking about what I owe, how much my interest rate is on each student loan, and what my strategy is towards repayment, along with answering some common questions I think that might come up during this journey. So a little bit about me if you're new here. My name is Avery, I'm 25 years old, and I graduated from college with my bachelor's degree in political science. I graduated in May of 2020, so that means my student loans have been in COVID-19 forbearance this entire time. My student loans are my only debt that I have, so the big focus on my debt repayment journey is going to be on my student loans. Now let's talk about my original balance and how much I owed when I began repayment. So my original balance before beginning repayment, and this includes a combination of the principal and any accrued interest while in school, was $22,074.68. I basically have this memorized by now. I did make a payment on August 30th, and I'll put the confirmation up on the screen, probably over here somewhere. I did make a payment for $1,807. This wiped out one of my student loans, and it brought down my balance to $20,267.68. Since then, interest has accrued for the past 5 or so days. I am filming this on September 5th, and now my balance is $20,276. So I'm already not a fan of the accruing interest on my loans, so I am definitely looking forward to trying to pay these off as quickly as possible. So that being said, I now have 7 loans remaining with interest rates that range from 3.76% to 5.05%. I'm going to put a visual up on the screen that just has everything written out neatly, but at 3.76%, I have 3 loans, one that's $339, another one that's $2,461, and a final one that is $2,649.49. At 4.45%, I owe $1,670.78 and $3,471.61. Side note, this is a combination. The reason why I have multiple loans is because my loans were in a combination of subsidized, which don't accrue interest during your school time or when you're in school, and unsubsidized, which does accrue interest as soon as the loan disperses. So that is why I have multiple loans at multiple interest rates. And the loans would be dispersed each academic year, so there was a different interest rate each year. At 4.53%, I only have one loan at $3,605.24, and at 5.05%, this is my largest loan and my largest interest rate. I owe $6,079.19. So not ideal. And when I first took out that loan, I believe it was around $5,600 was the original principal. You can see how interest accrues when you're in college that you're not really thinking about, that can have a big impact on future you down the line. Why did I pay off the 1807 loan? It had the highest interest rate along with the $6,000 loan, except I didn't have enough money to pay off the $6,000 loan. And I knew I had enough money in my savings to pay off this one though, so I decided to make the payment. I also wanted to make a payment before the interest pause ended for whatever I could afford, and I wanted a quick win, more or less, on this repayment strategy or this repayment journey. There's a couple different primary ways that people pay off debt. There's the debt snowball, which you target your lowest balance or your smallest debts first, and then start targeting the higher debts as you pay off the small debts. But there's also the debt avalanche, which targets your highest interest rate debts and then will go down from there to your lowest interest rate. What am I doing? I'm doing a combination of the two because why would I be simple? First thing I want to do is I've decided I want to tackle that $6,000 student loan because it has the highest interest rate, it has the biggest balance, and I think targeting that will make the rest of my debt payment journey just a lot smoother and a lot simpler. Once that's paid off, I think I'm going to skip the 3.76% loan, but go up to my 4.45% loan and then tackle my 4.53% loan. And then finally, just to finish it all out, I'm going to go back to the smallest interest rate and pay those loans off. This is of course subject to change, but at this point I feel most comfortable with this plan as it allows me both to save a little money on the interest while also tackling some of the smaller loans and getting quicker wins. So I am all about balance, so that is kind of how I came up up with this idea. Of course, something might change. I might get sick of my loans. I might decide that I actually don't care as much about debt pay down, and I decide to pull back a little bit on how aggressive I'm being. But that is what I've decided for now. Will I still be investing? Yes, I will still be making a mandatory 10% of my gross income contribution into my pension account, and I will still be contributing any extra income that I have towards my Roth IRA. I do want to make sure that I'm still building wealth even as I pay down my loans, as financial security is extremely important to me. So that's kind of where I've landed with that, is like I still want to be building wealth even as I'm paying down my loans. Of course, when you pay down your loans, your liabilities get decrease, which also increases your wealth, but that doesn't actually mean that you have any more money to yourself. Like, you are not getting more money by paying down your loans. You see what I'm saying? But like, if you're investing, the compound interest can accrue, or like the compound interest can like take advantage of the time horizon of investing, and it will help you actually earn money even as you're paying down your debt. Now let's talk about high yield savings accounts. If you are aware, high yield savings accounts are actually around 4 to 5% interest right now. So if you put your money into that account, you could accrue interest around 3, 4, 5%, depending on who you go with. I do have a high yield savings account with Ally. The reason why I bring this up is simply because high yield savings accounts are currently accruing interest around the interest rates of my student loans. It suddenly becomes a question of whether or not it's really worth it to aggressively target my student loans when I could be making money by putting that money that I put towards the loans into my high yield savings account. My answer to this is I understand that like mathematically it might make more sense to put that money into my savings account, but emotionally I just know myself to the point where having debt tends to bother me. So I really want to minimize how much debt I have. Of course, I still want to be building wealth on this journey. That's why I've decided I'm going to keep putting money into my Roth IRA, and I have to keep putting money into my pension. But as far as my high yield savings account, other than my emergency fund, because I do have an emergency fund, it's about 3 to 4 months of expenses, and my sinking funds like Christmas, vacation, things like that, I don't really plan on putting additional money into my savings account while I'm paying off debt. So I'll accrue interest on what I currently have, but in general, I'm not planning on putting additional savings towards my bank account when I have debt that I want to be paying off. I just know myself, and I know I feel more financially secure when I see my debt balances go down and my investing accounts go up. So what else did I want to talk about? How much money am I actually going to be able to put towards my loans? I have made about a million different mock budgets that range from either a basic repayment on a standard repayment plan to aggressive debt payoff. I would like to pay these off before I turn 27. I'm currently 25. My birthday was in June, so I have a little under 2 years to pay the debt off. I think I can do it, especially if I get a new job or increase my income in other ways. But as of now, depending on how I'm feeling each month, because I really want to listen to how I'm feeling and make sure the repayment journey is manageable for me, I should be able to put anywhere between $500 to $1,500 a month towards my student loans. So what does that look like? At $500 a month, I could pay off the debt at roughly, and this is roughly because I'm not accounting for the interest that accrues, roughly 41 months or a little over 3 years to pay off my student loans. If I am putting $1,500 a month towards them, I could take about 14 months to pay off the debt. So a little over a year. Basically, I'm in that 1 to 3 year time range, and I know I want to be around 27. So I have a good plan in place, I think, in order to reach that goal. Of course, I know if I have any extra income, I'm going to put that money towards this goal. As far as like any past wins that I've had, because why am I even so confident that I can pay off this debt in the first place? It's because I have done it before. I paid off my car loan. I did buy a car back in 2020. It was a used vehicle, and I owed about $11,000 on a loan for the car, and I had decided that I wanted to pay the loan off as quickly as possible. I decided to pay it off, and I did within exactly 1 year of taking out the loan. So I have hustled before. I know that I can do it. That predates my YouTube journey, or like starting out sharing my finances or my finances on YouTube. But that is something that I know I've done before, and I can do it again. Only other thing I really want to mention is, do I regret my student loans? So I don't regret my student loans per se, although I wish I knew what I know now about debt and student loans. If I had known that, I would have definitely taken out a lot less in loans. Of course, I have a relatively small, unfortunately, I guess, I have a relatively small balance in relation to others. By unfortunately, I mean, unfortunately, the highest average debt balance is so high. But obviously, fortunately for me, I am not taking out as much in student loan debt as the average borrower. For context, why do I know a lot more about debt and loans? Of course, I'm interested in personal finance, so this is something I think about and read about and learn about in my free time as a hobby. But I also work as a financial aid administrator, so I know a lot more about financial aid than the average person will probably ever know about financial aid, which kind of sucks because it's like you don't predict the trajectory you're on. But if I could have, I would have known a lot more about student loans, and I would have worked a little harder in the summer times to not have as much debt to take out during the school year. Thank you all for watching. Let me know what your repayment strategy is and how much you owe. Are you paying the monthly minimum payment? Are you planning to do more? Are you doing a specific strategy? Are you considering public student loan forgiveness or PSLF or income-driven repayment or IDR? Are you interested in the new SAVE program? Yeah, I want to hear all about it. So do you have a goal for when you want to pay your debt off? Just let me know whatever you want to tell me. But yeah, thank you all for watching. Consider giving this video a thumbs up as it really helps out my channel. Consider subscribing if you want to stick around and see my student loan repayment journey, as I plan on making weekly videos tracking my progress towards my goal. Yeah, but otherwise, I will catch you on the next one. Bye now.